January 2026. While the world watched the tech giants, a 5,000-year-old asset did the unthinkable. Silver, often dismissed as gold's poor cousin, shattered records, hitting an all-time high of over $120 an ounce. Before we talk numbers, before we talk charts or trends or market predictions, I want you to close your eyes for a second. Imagine holding something in your hand. Something that has been traded, treasured, and fought over for 6,000 years. Something that kings paid ransoms for. Something that ancient civilizations used as money long before paper ever existed. That thing is silver. And right now, in 2025, something extraordinary is happening to it. Silver is no longer just a precious metal sitting in a vault or decorating jewelry. It has become the backbone of the technologies that are reshaping our world: solar panels, electric vehicles, smartphones, semiconductors. And the world needs more of it than we can mine. That gap between supply and demand? That is where your opportunity lives. To understand where silver is going, we have to understand where it has been. This is not just investment history. This is human history. Around 700 BC, the ancient Lydians were the first civilization to mint silver coins. Economies built on silver rose and fell for thousands of years. The Spanish Empire in the 1500s extracted so much silver from South America that it literally caused global inflation, the first recorded case of monetary supply affecting world markets. That is how powerful this metal is. Fast forward to the 20th century. In 1980, the Hunt brothers famously tried to corner the silver market, driving prices from under $2 per ounce to nearly $50. The market crashed. But silver never disappeared. It waited. It always comes back. Here is where the story gets really interesting. And here is what most casual investors miss completely. For most of history, silver was primarily a monetary metal and a luxury. But something changed in the last 30 years. The digital and green energy revolution turned silver into an industrial necessity. Today, over 50% of all silver demand comes from industrial applications. Not jewelry. Not coins. Industry. Every single solar panel made today contains silver. Not a little silver, a meaningful amount. A standard residential solar panel uses about 20 grams of silver. There are currently over 1.5 billion solar panels installed worldwide, with projections to grow 10 times over by 2050. The math is staggering when you think about it. Then there is the EV revolution. Electric vehicles use up to twice the silver of a conventional car. With over 100 million EVs projected to be on the road by 2030, the demand surge is not coming. It is already here. Now here is the part that keeps silver analysts up at night. The supply side of this equation is broken. Global silver mine production has been essentially flat for the last decade. The easy silver has already been mined. The remaining deposits are deeper, more expensive, harder to access. And here is a little-known fact: most silver in the world is not mined as silver. It comes as a byproduct of mining other metals like copper, zinc, and lead. That means silver supply is not entirely controllable. It depends on demand for other metals entirely. Meanwhile, above-ground silver stockpiles, what we call silver inventory, have been declining steadily. Unlike gold, silver is consumed in industrial processes. It gets used up, broken down, dispersed into electronics and panels and batteries where recovery is difficult and expensive. The world is slowly eating its silver reserves. So you are sold on the story. The question now becomes practical. How do you actually invest in silver? And what should you know before you put your first dollar in? There are essentially four main ways to own silver. Physical silver, ETFs, silver mining stocks, and silver futures. Each has its place. Each has its risks. Physical silver is the most tangible form of ownership. Silver coins like the American Silver Eagle, Canadian Maple Leaf, or silver bars from reputable mints. You hold it, you store it, you own it outright. No counterparty risk. The downside? Storage, insurance, and the premium you pay over spot price. Silver ETFs like SLV or SIVR give you price exposure without the storage headaches. You buy shares through your brokerage like any stock. Quick, liquid, easy. But you never actually own physical silver, you own a paper claim on it. Some investors are fine with this. Others are not. Silver mining stocks are what is called leveraged exposure to silver. When silver prices go up 10%, a well-run silver mining company might go up 20 or 30%. But the opposite is also true. These are businesses with operational risks, management risks, geopolitical risks. High reward. High volatility. Let us talk about one of the most important concepts for any silver investor. The gold-to-silver ratio. Historically, this ratio has averaged around 47:1. That means it has historically taken about 47 ounces of silver to buy 1 ounce of gold. In 2020, this ratio hit 125:1, meaning silver was extraordinarily cheap relative to gold. As of today in 2025, the ratio still sits well above historical averages. What this tells many analysts is that silver remains historically undervalued compared to gold. Think of it this way. Gold gets the headlines. Gold gets the headlines on financial news. But silver has historically outperformed gold during precious metals bull runs, because it starts from a cheaper, more undervalued position. When the crowd finally discovers silver, it moves fast. We cannot talk about silver investment without talking about the elephant in the room. The global financial system. Since 2008, the world's central banks have printed trillions of dollars in new money. The United States national debt has crossed $34 trillion. Globally, total debt stands at over $300 trillion. These are numbers so large that the human brain cannot truly comprehend them. But history tells us what happens when governments debase their currencies. Hard assets win. Silver, like gold, is a finite physical asset. Nobody can print more of it. In an era where trust in paper currency is being questioned by an increasing number of people globally, the appeal of real, tangible, scarce assets is rising. Silver sits at the intersection of hard money and industrial necessity. That is a rare combination. Now I want to be straight with you. Because any channel that tells you silver is a sure thing is lying to you. There are real risks here, and you deserve to hear them. Risk number 1, silver is volatile. More volatile than gold. Prices can drop 30, 40, even 50% during broader market sell-offs. In 2008, silver fell nearly 50%. In 2020, it crashed along with everything else before recovering sharply. If you cannot stomach these swings, silver may not be for you. Risk number 2, industrial demand can slow down. If the global economy enters a severe recession, industrial silver demand could drop. Solar panel installations slow down. EV sales fall. The industrial thesis weakens. Silver is not purely a safe haven, it is part industrial commodity, and that cuts both ways. Risk number 3, market manipulation. Silver has a long history of allegations of price suppression by large financial institutions. Whether you believe this or not, the silver market is smaller than gold's and therefore more susceptible to outsized moves by large players. So we have laid out the case. History. Industrial demand. Supply constraints. Macroeconomics. The gold-silver ratio. And now the question everyone wants answered. Where is silver going? The Silver Institute projects that global silver demand will remain at or above record levels through 2030. The green energy transition alone could require over 100 million additional ounces of silver per year by the end of this decade. Meanwhile, no major new silver mining projects are coming online fast enough to meet this demand. The math, on paper, is compelling. Multiple respected analysts, including those at Citibank, Goldman Sachs, and independent research firms, have published price targets for silver ranging from $40 to over $100 per ounce in various scenarios over the next 5 to 10 years. These are not fringe predictions. These are mainstream financial institutions running supply-demand models. But perhaps most importantly, silver remains affordable. Today, average retail investors can buy a physical silver coin for $30 to $40. For the price of a dinner out, you can own a piece of a metal that has been valued by humanity for 6,000 years, is consumed by every major technology company in the world, and faces a structural supply deficit for decades to come. Here is what I want to leave you with. Silver is not a get-rich-quick scheme. It is not a meme. It is not a trend. It is a 6,000-year-old store of value that has just been handed a brand new purpose by the greatest technological transformation in human history. The question is not whether silver has a future. The evidence is overwhelming that it does. The question is whether you will be part of that story. Whether you will take the time to understand what you own, why you own it, and how it fits into a broader financial plan. Do your own research. Talk to a financial advisor. Understand the risks we talked about today. And then make a decision that is right for you. Because the best investment is always the one you understand. I am glad you watched this. If this documentary gave you a new perspective on silver, share it with someone who needs to hear it. Like, subscribe, and I will see you in the next one.